Hello friends. Hello friends, we will be starting in another 2 to 3 minutes when people will start joining. Yeah. So friends, now let's start. Mm. So today we will be starting with the market snapshot and introduction. So yeah. So we are starting just. Mm. So hello everyone. Today Indian market snapped a multi-day slump. Sensex jumped 443 points to 82,200 and Nifty closed at around 25,090, driven by stronger market Q1. Yeah, earning from major banks. In this video, we will discuss the winners and losers, sector actions, macro drivers, and what it means, all for an investors. Let's jump in. So abroad, so if we see for a broader market, Sensex gained 0.54% and Nifty rose 0.49, reclaiming the 25,000 marks after 3 weekdays losing. So mid cap edged up 0.5% and small caps were flat. Investor focused mainly on Q1 earnings. So on the weekend, so many banks have given the results. So also global Qs were mixed, but a strong domestic earning momentum keep market buoyant. So if we see on weekend, so many banks has given the result. So if we see the private bank led rally with ICICI Bank, HDFC Bank and HDFC Life standout performance post robust Q1 results. So ICICI Bank went up by 2.5%. It is having 15.9% year-on-year growth. Metal sector also ended by 0.5 to 1% higher, powered by strong earning and pipeline optimism. So under the sectors which were underperforming were IT, PSU banks, oil and gas, and FMCG flagged, dragged by concern over decelerating Q1 growth. IT led the decline with Wipro, HCL, Infosys, all were down by roughly by 1%. So the top stocks of the day were ICICI Bank and HDFC Bank. Mainly ICICI share jumped 2.5% after Q1 PAT rose 15.9% to 13,558 crore and NII grew by 10.6%, affirming margin resilience. Similarly, HDFC Bank has also beaten the expectations with PAT up 12% to rupees 18,155 crore, and the stock gained a strong intraday also. Intraday momentum was very high for HDFC. So if we see the other company which was in focus was the Reliance Industries. So its also results also came on weekends on Saturday. So despite record profits, Reliance share fell by 3.5%. Why this happened? Because in Reliance profit, it was mainly due to a one-time selling of the uh, paint company, the famous paint company. You say that share they have sold. So Asian Paint share which they have sold, so they have earned the profit from that. So one time, so largely due to one of offset gain concern and cautious core outlook. So other core things has also be to be looking out. So its O2C, oil to chemical business was not that great. So we will discuss all those things detail later in coming slides. Yeah. So Eternal and Blinkit also Blinkit's result came. So today its share rallied by 7.5% after Q1's revenue surge 70% year on year, mainly driven by Blinkit 2.5x jump in top line. So mainly it was in loss, but it shared up because its revenue grew and its business grew basically. It take the margin from the business from the other giants like DMart and others. So now what Blinkit has done, it has like make the people slave by like ordering online, sitting at their home's place. So due to this, like their business jumped. So despite profit plunging, and but the profit declined by 90%. So we will analyze the Blinkit and Eternal share in detail in coming slides. So UltraTech Cement, another a quick note. Q1 bid drove its stock higher, contributing to broader market strength. So its result, UltraTech Cement result was very good, mainly. Yeah, so that's why its stock went up. So looking to other macro and technical outlooks, FIIs has pulled out 10,775 crores so far in July, contributing a trend, though domestic flows offsets the outflow today. But yeah, domestic players are buying due to the good results which is coming. So globally markets are cautious ahead of US tariff decision and Fed signals. So another thing of concern in the global market is the US tariff. So what tariff Trump will levy, and so the mainly if companies or market know what exact tariff would be levied, so if there is some certainty, then it will perform good. But there is not certainty in the market actually due to Trump's volatile mood swings. Market is very scared. So let's see what happens where tariff war whatever is when it settles. So technical view, Nifty has a strong support at 24,900 and faces resistance near 25,250. A sustained move above range could signal upside momentum. So now what should we take from this? So Q1 earnings are the main market drivers. Banking and metal led, and IT lagged. So banking shares has given good results, and metal shares have also given good results, and IT sector has not given good results. So that's why IT sector stocks were down, whereas banking and metal sector stocks were up. We should monitor rising cost for banks and energy sector headwinds. So technical levels should be around 24,900 support and 25,250 resistance. And also we should be alert for the macro events like tariff and the central bank news, whatever like Jerome Powell is going to do. So that will also affect the market. So in summary, what we do Indian market rebound today, led by bank, metal and cement stock, offsetting tech and FMCG weakness. If you are bullish, consider setting up buy on dip alerts near 24,900, where investors should await a clear breakout over 25,250. So like we have mostly analyzed the today's market. Now let's go to the Q1 result which has came today for so many companies. So firstly let's go to the UCO Bank result. So for UCO Bank, net profit jumped 10% year on year to rupees 607 crore. Its net interest margin also rose by 7%. So this bank is looking good. So we will talk about this in detail somewhat. So UCO Bank reported a 10% year on year increase in net profit for the first quarter of financial year 26 to rupees 6,700. So compared to rupees 551 crore in the corresponding quarter of previous year. So the bank reported 10% year on year increase in the net profit. So we will also discuss if it has beat the margin or not. In further posted a rise of nearly 7% in the net interest margin NIM for the first quarter of financial year 26, reaching rupees 2,403 compared to 2,254 crore the corresponding period last year. NIMs represents the gap between the interest earned and the interest paid out. So whatever NIM net interest margin is, suppose bank takes the money from the RBI on some rate and then it lends to the market, gives the money in the market in the form of loans, corporate loans, personal loan and SME loans and lots of loans they give, and whatever they earn from the loans, so that is their margin basically. So they takes from like suppose 6% and they sell in the market, give the loans in the market around its loan rate varies, so average 13 to 14%. So whatever the 5 to 6% spread is loan spread is there, so that is their earnings. And in that also, like, they have many um, cost also, like cost of the employee, cost of giving the loan and all, running the business and all those things. So UCO's Q1 result for the fiscal year shows a stable yet cautious performance. The bank reported net profit of rupees 610 crore, up from rupees 551 crore year on year basis, indicating solid profitability despite ongoing market challenges. This growth in profit reflects efficient cost management and resilience of the core business. Even as the banking sector grapple with economic uncertainty, business head Investa reported that. On the past quality front, UCO Bank showed a slight improvement in gross non-performing GNPA. It dropped to 2.6%. So its NPA is quite bit improved from 2.63% from 2.69% in the prior quarter. The decline signal enhanced management of stressed assets, highlights the effectiveness of the bank's risk control measures. So the bank is controlling the risk. So however, the net non-performance adjust ratio also improved to 0.45% to 0.50%, pointing to strengthening in the overall financial health of the bank. So for the bank result, we should see the revenue, profit, and also we should see the NPAs. If its gross NPA is increasing or decreasing. If its NPA is increasing and its result is also good, but that is not good, we should also concentrate on the NPAs. So UCO Bank's NPA is also showing the improvement. So and the management commentary on this is that the UCO Bank continues to demonstrate steady growth in the loan book and deposit base, which is essential for the long-term strategy of enhancing profitability and expanding market share. While profitability saw a slight dip compared to the previous quarter, the improvement in asset quality and strong operational fundamentals suggest that the bank is on a solid path toward maintaining stability and future growth. So in a nutshell, like, UCO Bank was like good. It beats the estimates also. So now coming to the UltraTech Cement, its profit surged 49% year on year to rupees 226 crore and revenue up by 13%. So UltraTech Cement is a group from the Aditya Birla Group flagship firm. So mainly its core business is in the cement. So it makes do the manufacturing of the cement. Also today it posted its a stellar rise in the consolidated net profit for the first quarter of the financial year 2025-2026 Q1 financial. So Aditya Birla Group's company consolidated net profit rose 49% year on year basis to 2,226 crore compared to rupees 1,495 in the same period last year. This profit figure is attributed to the owner of the company. The cement major also posted a 13% growth in revenue. It posted 13% growth in revenue, which came in at rupees 21,275 crore, up from 18,880 crore in the year ago quarter. So UltraTech Cement posted a sequential decline in its financial performance for the June quarter, with profit after tax PAT falling to 10% to rupees 2,226 crore from rupees 2,482 crores reported in the March quarter. Revenue also dipped 8% quarter on quarter to rupees 21 compared to the. So it's quarter to quarter there is some dip, but year to year it's uh, earning and that is improved. Earning and profit both are improved. Despite the sequential softness, the company delivered strong year-on-year growth, and EBITDA jumped 44%. Yeah, so let's see its consolidated volume grew by 9.7% year on year, aided by the inclusion of India Cement. So this UltraTech has acquired India Cement, so it also start giving the benefits. So its volume increased by 9.7%. UltraTech has increased its gray cement capacity by 3.5 MTPA in Q1 financial year 26, bringing its total capacity to 192.26. Indian Cement, with a capacity of 14.45 million tons per annum, became a subsidiary of the UltraTech Cement effective December 25, 2024. So UltraTech said it has successfully turned around the performance of the acquired assets, helping India Cement stock on EBITDA margin of 92 crore, a significant improvement from a loss of 9 crore in the same quarter last year. So the UltraTech management has helped make the India Cement to increase its profitability. So additionally, UltraTech stated that it has unlocked an extra 0.3 MLPA capacity through debottling in the northern region and is formulating a capital expenditure plan for the next 2 years. So it has also plans for the capex. The focus of the investment will be on operational upgrades to align India Cement assets with UltraTech efficiency benchmark, the company added in its press release. So if we talk about the price of the UltraTech Cement, so today its uh, price actually moved by 0.3% following the good results. So in the past 1 year, it has risen 11% in July so far. The stock has climbed 4%. So in 1 year, it has given a run up of 11%, and in July, it's climbed by 4%, building an 8% gain in June. So this followed a 3.4% dip in May. So that was, so overall, if we talk about the UltraTech Cement's results, so it was a very decent result which UltraTech given. So now let's talk about the other companies which have given the results today. So Mahindra Logistics is the other company which has given its Q1 results today. Though so its estimated revenue is around 1,04,020 crore, EBITDA of around 66 crore. So its key points which has to check is fuel cost, network density, and margin trajectory. So investor takes is hold watch for margin stability and cost effectiveness before making a play. And now we go to the IDBI Bank. So for IDBI Bank reported a PAT of 2007 crore, increased by 17%, NIA at 3,166 crore, and NIM at 3.6 crore. So GNPA at 2.93. So gross margin at and net NPA loss at 0.21%. So it's stable assets quality and strong provisioning, PCR of 99%. So for investors, it is solid recovery, monitoring lending growth and provisioning level for stability. Yeah. And now let's come to the eternal. Earlier it was Zomato eternal result. So its net profit rose to 17% to 2007 crore. Stock rallied 7% today after a beat commentary. So although its net profit is decreased, but it's due to its commentary for the coming future revenue growth, it's rallied by 7%. So its quick commerce partner Blinkit revenue grew by 2,400 crore plus 155%, but net loss widened due to bistro capex. Yeah, so management sees margins bottoming. Bistro and nugget investment may drive future profitability. So whatever like they are trying to optimize the business so that they have also stopped giving too much uh, discounts on the product, and now the people are habitual of using their product, so now they are trying to improve on their margin levels. So let's see what if the company management is able to achieve that or not. So for investors, it is a high growth at cost if focus shift to margin discipline and growth. So this company's main focus earlier was to increase the business by giving profits and disruption the market, and now they are shifting their focus on the once they have captured a lot of market share. Now they are focusing on mainly profitability, and they are trying to optimize their business. They are also expanding on the dark stores a lot, so that they can easily, whenever any order come, they can easily give within the minutes, they can give the products to nearby. So they are also expanding, so capex also is going, and also they were giving discount to capture the market. Now I think this will start paying off in coming years. Let's see if the management is going to make turnaround to this or not. Yeah, and now let's cover the next company, Havells India. So its Q1 revenue results are out also. So its revenue increased by 5,455 crore, PAT down by 15% year on year to 348 crores. So its PAT is down and its revenue is down due to sluggish rural demand. Raw material cost has increased, led to margin compression. So like raw material cost, and they are not able to increase their product cost too much due to the competition in the market. That's why their margin is compressed. So for investor, we should watch on the margin trajectory and how the firm hedge commodity as a rural and urban recovery unfold. As this time the monsoon is also good, ongoing good, so company is hoping for the recovery in the rural demand. Yeah, so let's talk on the another company which has given the result is the Oberoi Realty. So its profit drops 28% year on year to 4,021 crore, and it has also given an interim dividend of rupees 2 per share. So if we see in detail, so Oberoi Realty on Monday 21st announced its April to June quarter result for the financial year today means. So company's net profit dropped 28% to 421 crore in first quarter compared to 5,084 crore in the same period, according to the consolidated financial statement. So real estate firm revenue from core operation also dropped nearly 30% to 987 crore in the April-June quarter compared to rupees 1,405 crore in the same period in the previous financial year. So even though the company's total expense for the quarter dropped 14% to rupees 574 crore compared to 664 crore in previous quarter, the cost for land, development rights and Construction jumped 86% to rupees 6,226 crore for the first quarter compared to rupees 335 crore in the same period a year ago. So board of directors of also announced on Monday a rupees 2 dividend per share interim dividend issuing with its first quarter's result. So if we go to the if we now we should let's now once again discuss in detail the top lines of the Blinkit Zomato. So if we see, its revenue surged 70% year on year to rupees 7,167 crore, powered by all key verticals: food delivery, quick commerce, Blinkit, hyper, and going out. So quick commerce, Blinkit saw 155% year on year spike, contributing to rupees 2,400 crore. Its food delivery business grew by 17 to 18% to rupees 2,261 to 2,657 crore. So, despite booming revenue, PAT plunged 90% year on year to 25 crore, down from rupees 253 crore last year. So, if we see, total expense jumped 77 to 79% to rupees 7,433 crore, driven by Blinkit expansion and growth investment. As I have told earlier, so that they are expanding a lot, they are investing in creating the dark house so that they can deliver the product in very less time, and they are making their infrastructure. So this is the one time investment for the expansion, so might be they will go profitable in the coming years. So adjusted EBITDA fell 42% year on year to rupees 172 crore due to reinvestment into quick commerce and going out ventures. Still, food delivery margin improved, with EBITDA margin rising from 3.9% to 5% of net order value, as now people are more ordering online. So it's and it had stopped giving so much discounts also, so it's now it's focusing on the margin improvement. So it's also seen in the results. So strategic highlights from the management, what management is saying: Blinkit's November outlook: food delivery for the first time 9,203 crore versus 8,967 crore. Store count store count increased to 1,554, targeting 2,000 by December 2025. Going out segment clock 8,000 chronologized November, average order value of rupees 1,700. So rotational leadership model introduced across business for agility. Management notes: food delivery may only grow mid-teens this year. Blinkit margin to improve gradually with investment focus lasting 2 to 3 years. So if we see what analysts are saying, so despite poor profit, stock surged 7 to 8%, hitting a 5-month high. Investor cheer top line growth and scale momentum. So now investors are currently focusing mainly on the revenue growth and their expanding momentum basically, and they are discounting the growth that once they are expanding, so their profitability will also increase in the coming years. So brokerage remain bullish, citing strong growth visibility and FIRS improvement, though they caution on margin pressure. So if we bottom line this, so Zomato internal delivered spectacular revenue growth across all fronts and firmed up food delivery profitability. However, its 90% profit drop and margin compression highlight the significant cost of scaling Blinkit and going out. If you believe in their aggressive growth infrastructure and eventual monetization. This is a long-term winner, but short-term visibility on profitability remains limited. So now let's go to the some very good news, like some news on the market for Sona BLW share. So Sona BLW share rise over 3% on JV with China's joint venture with China's JNT to develop driveline system. So mainly Sona BLW is in the auto parts business. It makes the auto parts for the EVs. So auto component maker, its share today rallied by over 3% to rupees 496.5 in morning trade on July 21st after a new joint venture in China. The company has partnered with Hubei based Jimte Machinery Corporation Limited (JNT) to manufacture and supply driveline system for automatic OEMs in China and global market. The global venture, which is expected to become operational in the second half of financial year 26, will cater to both electric and internal combustion engine vehicle platform. Sona Comstar will invest $12 million for a 60% stake and retain controlling interest, while JNT will hold the remaining 40% by bringing in $8 million worth of assets and operational business. So now more great news from another company, Apollo Hospitals. It is it is trying to spin off its digital arm to unlock shareholders value. Mid-teen revenue growth expected from financial year 27. So Sunita Reddy, managing director Apollo Hospital Limited, said that the primary goal of the proposed spin-off and listing of its pharmacy and digital health insurance into a new entity. So let's first understand what is a spin-off. Spin-off is like there is a one company and it creates another company from itself. So a new entity is created. So like it is Apollo hospitals are in many things. They are managing the hospitals, and also they have Apollo pharmacy, and they are present online also. So online pharmacy you can order from. So they are trying to spin off that pharmacy business. So in this way, whatever who are the shareholder, they will get a extra new share for every Apollo share which they hold. So this in this way they like it will help in the earning. So they will so value would be created from that spin-off. So what Sunita Reddy has to say. So Apollo Health Technologies unlock from its shareholder. Reddy expect Apollo's core hospital service segments, which constitute a little over half of the group's revenue, to grow mid-teens in the next few years as new capacity comes online. Apollo earlier this month announced the demerger and so earlier Apollo has also announced the demerger and listing of Apollo Health Technologies within the next 18 to 24 months. The new entity will consolidate the company's pharmacy business, both online and offline, with its digital health platform, Apollo 24/7 and backend supply chain of KeyMed. So these are the main important Q1 financial year results and important news. So now we will move to the fundamental analysis of the stocks. So we will be moving to the so I'm just sharing my screen so that can you someone comment, are you able to see my screen? Hi guys there. So we will be doing the fundamental analysis of UltraTech Cements today. So UltraTech Cement today it has given its Q1 financial year result. So it is a UltraTech Cement is a part of the Nifty 50 company. It is the part of, so Nifty 50 is the top 50 company of Indian top Indian companies. So it UltraTech Cement is mainly engaged in manufacturing and sale of cement business. That is the main core business. So and it is the uh, this is the screener site. You can you can use screener to do the fundamental analysis of any stocks. So this is the overall structure. I will firstly give you just overview of how to use the scanner, and then we will do the fundamental analysis of UltraTech Cement. Okay, so this the first tab, it contains like market capitalization. It all the details, like gives stock P, book value, dividend, ROC, face value, and then this chart, like its stock price, how its movement is in the 1 year frame you can see, in the 6 month frame you can see, or 1 month frame also you can see what all from this chart. And then like it is listing about the pros and cons, what are the pros of this company and cons of this company, and this tab gives all the peers of that sector. So UltraTech Cement of like it is in the cement construction sector, so all the companies of that, you can see commodities, construction material, cement and product. So all the its competitor and peers, it will list down, and their market cap, P, and everything. You can compare all the company of that sector. So if you go to the next tab, so here it gives the quarterly results also. We can see the quarterly results of all the quarters. We can compare from its previous quarters also. And it's this tab gives profit and loss statement, what all CAGR, compounded sales growth, compounded profit growth, stock CAGR, ROE, return on equity, and it's the balance sheet where like capital adequacy, reserve, borrowing, and other things are there. We will go in each slide like one by one. Just I am introducing it. Cash flow, cash from operation. So how much, like company is showing profit, but it should also reflect in the cash flow also. And other ratios like debitor days, inventory days, so how many days it is in inventory, creditors, and working capital days, in how much days like it's manufacturing the product, and then it will come go to the market, and money will come to him in how many days. So shareholders pattern also, like in each quarter, how the promoters stake is increasing or decreasing, or FIA's stake is increasing or decreasing, DIA's, government, each one's stake you can see here. From this you can take a guess, like if the FIAs are buying bullish more on these, or DIs are bullish on this companies from here. So and in the last tab, like there are documents. So in this, like June conf call, PPT, and all those things are there for announcements recent. In this tab it will show the whatever recent announcements are there, or important news are there, like it is going to commissioning of cement capacity announcement, some announcement company is doing. And this is, here you can search, and it in all tab it will show all the details. So now let's come to the UltraTech's fundamental analysis. Yeah, so this is a large cap company. Its market capitalization is 3,70,608 crore. Its current price is 12,577. Its high and low value, like today, its high has gone to whatever 12,714 and low is 10,048. Stock P is 53.6. P is price to earning ratio. So like it's a measure of P. If a company P is very high, means it's very expensive. So price to earning, so it's, if P is high, means it's, yeah, expensive, means its earning is not increasing but its price is increasing. That's why P is high. So book value, dividend yield, so how much dividend it gives, 0.56. ROCE, return on capital employed. So ROCE is whatever capital is both the equity and debt, and ROE, return on equity. So ROE is the whatever like shareholder value is there, equity is involved there. So from that it is earning, that is ROE. So face value is 10. It has not given any bonus or split. It has not split, so its face value is still 10. So now if we see 1 month performance, so its 1 month performance is average. Now let's come to this pros and cons. So company has been maintaining a healthy dividend payout of, so it is giving a good dividend. So cons are, stock is trading at 5.24 times its book value, and promoter holding has decreased over last one quarter by 0.77%. So company has a low return on equity, ROE of, so on equity it is not giving so much return. Its ROE is 10.4% over last 3 years. So if we see the competitors of the UltraTech, so Grasim Industries is there, Ambuja Cement is there. Ambuja Cement, Adani Group has bought. Shri Cement, JK Cement, Dalmia Bharat and ACC, these are its competitor. If we see the 1 year return of this, UltraTech has given 7.1%, Grasim has given negative return, Ambuja has also given minus 9.4%, Shri Cement has given a good return of 15.58, JK Cement has given a very good return of 49.75%, and Dalmia Bharat has given 24.39. So JK Cement is like not a large cap company, so it is as large cap companies generally give somewhat less return compared to mid and small cap companies. SEC has given negative returns. So for quarterly results, if we see, its sales is like continuously increasing, 15,000, 15, 18,000, 17,000 September, like it's somewhat decreasing but it's in a increasing manner only. In previous March quarter it was 23, it's decreased in the June quarter, as in June quarter like monsoon is there, so somewhat less construction activities are happening, that's why it's yeah, its revenue is decreased. So if we compare June to June, so earlier it was 18,919 sale and it is 21,279, so it has a significant increase if we compare quarter to year to year. So operating profit also, if we compare year to year, it has increased, it's doubled actually, no, 3007, and yeah, it has significantly increased, but quarterly it's flat or it's decreased only. Profit before tax also, if we see, it has increased year on year, and quarterly it's decreased. Net profit also, like as a June quarter, there are less construction activities due to monsoon and all those things. So we should compare year on year for June quarter. So EPS has also increased manifold from 28. If we see, yeah, June quarter from 51%, 51 rupees to 75 rupees. Net profit also increased from 14,000 to 221,000. So if in this we can do the profit and loss. So sales, these were the quarterly results, and this is in like year wise, March 2014 March, yearly wise in March to March comparison is there in profit and loss. So balance sheet also you can see the reserve, total assets and liabilities. It is also like March to March 24-25. Its equity capital is increasing. Its borrowing has also increased, whereas total liability is also increased and total assets has also increased. Now let's come to this shareholder pattern. So promoters are like they have decreased there. In June 22 it was 59.66, 96 up to September. If you see 99 in September 2024, 99 in December 2024 it has increased, but in March the quarter they have decreased. The promoters have sold the stakes somewhat. FIAs has significantly increased their contribution by 13% to 14%, but in this quarter, December quarter, they were having 16. December 2024 they were having 16.98%, and now they have decreased. But DIs are bullish, they are increasing 15.15 in previous December quarter, and March quarter they have increased the stake. Government stake has also, so if we see the public are have also increased their stake. Government stake is negligible and constant only, and the number of shareholder has also increased. So here you can download the PPT and just you can go through the PPT and see the details. So friends, if you have any questions and anything, please comment below about the company, or you want to learn more thing about the fundamental analysis, do let me know in the comment box. So please comment friends if you like the analysis, and also let me know what all you want me to make the video for. Guys, please support my channel, and also let me know how what all videos you want me to create. Mm, I'm looking in the comments. Please comment if you. So, guys, we can once review the. Mm, okay, as the banking sector, many result have came. Then we can go to the Skinner and like if we check HDFC Bank, we can analyze the stock and see its peers also. So HDFC Bank has a market cap of 15 lakh 33,966 crore. Its current price is of around 2008, high value 2027, and its low was 1588. Stock P is 21.7. So in banking, its book value is, we see the book value. So in ROC, return on capital employed, is 7.51, and ROE, return on equity, is 14.4. Its face value is 1. So if we you can read from here about HDFC, what it is. HDFC Bank Limited is an Indian banking and financial company headquartered in Mumbai. It is India's largest private bank. So earlier HDFC was giving very good returns, as it is what very large company. As its size grew, so it's hard for HDFC to grow, but as a steady compounder, it is good. It gives steady returns. Like if you want your capital to be saved and don't want your capital to be like ruined away, so as a base of your portfolio you can keep HDFC. It price will not be decreased and not be increased. So in world also, like after the merger of HDFC and HDFC Limited, it's became the world's 10th largest bank by market capitalization. Now let's see its price movement. So 1 year, like it has given a rally from 1618 to around 2000. So it has given a massive rally in 1 year. Good return. For 6 months also, like it has given a good return. So if we talk about the pros, company has delivered good profit growth of 21% CAGR over last 5 years, and company has been maintaining healthy dividend payout of 23.3%, and company's median sale growth is 16.4% of last 10 years. And what are the cons? Cons are like trading. Stock is trading at 2.93 times its book value, and the company has low interest coverage ratio. Contingent earnings include an other income of 1,44,780. So we discuss about its peers. So main private banks are HDFC's competitors are ICICI Bank, Kotak Mahindra Bank, Axis Bank, IDBI Bank, IndusInd Bank, and Yes Bank. If we see the quarterly results, so for ICICI Bank, Axis Bank result have gained, IDBI Bank has also. So in of this all the peers, ICICI Bank is the most good company. If we see comparing the peer, it has given a good result. ICICI Bank has given, and it's, if we see return wise, 1 year return of ICICI Bank is 17.39, 3 months, 6 months profit growth, and HDFC Bank return is 24.6%. Kotak's 18.86. Axis 1 year return is negative. IndusInd Bank, as there are some issues in the bank, so that's why it has not given a good return. And Yes Bank, as it is a small Bank, it has also not given a good return. So in banking sector, I think HDFC is the good bank, and comparable to it, ICICI and HDFC. These two are the top banks. If you are considering, you can compare both of them. So ROC is also comparable. ROE, return on equity, of ICICI Bank of is greater, 17.97, whereas for HDFC it's 14 only. Debt to equity ratio. So as their main material is money only, so these company take debt from the RBI and they distribute to the customer, and whatever the variance range is, uh, like they take money on 6% and give the money on 12 or 13%, that range, that is their income. So in that they also had to subtract their operation cost, maintaining the branch, employee cost, and all those things. Yeah, and earlier Axis Bank was also performing good, but like this quarter it has not given a good result. IDBI Bank was also given a like average result only, not good. So if we see, revenue has increased in this quarter from 86,000 to 87,332. Interest has interest part has also increased from 46,000 to 47,000. Expense has also increased from 47,000 to 64,000. Financing profit has also decreased. So other income has also increased this time. Profit before tax has decreased this quarter by 20, and tax also. So net profit has decreased due to margin pressure, due to decrease in the interest rate. RBI has decreased the interest rate, so that's why it has a margin concern. EPS has also decreased in this quarter. So although revenue has increased, but EPS or profit has decreased for HDFC Bank. So it's quarter by quarter comparison of the profit, and these are the balance sheet you can see. These are the cash flow ratios. Return on equity, if you see, it's increased. ROE has also decreased in March 2025. Earlier, like in 2014, HDFC Bank was the leader. As you see, ROE was 22%, then it started gradually decreasing along the year 2017-18 as the bank started growing. So its ROE also started decreasing. So now it's at 14%. If you want a decent earnings, um, then it is good. Like you can keep this as a core of your to save the, like to make the portfolio. You don't keep all the like fast batsmen in your team. You keep some pacers also, like who like if you take the example of the cricket analogy, so like Biren Sehwag, in a team you keep only one. Those are the like small caps. So Rahul Dravid is the HDFC, which like is the core of the team. They, in the tough times, they keep your portfolio strong, so your portfolio is not drawn basically. Yeah, so it is like base of your portfolio. It will, whatever money you are putting in the stock market, it is less volatile, so it will preserve your uh, wealth. It will not decrease, and it also, like it's 14%, it will double in 5 years if you follow the rule of 70. So if you see the promoter stake, so promoter is actually gone. There is no promoter in HDFC Bank. It is fully managed by the professionally managed bank. So this is the good part of it. So like you there is no risk of like drowning of this back, like what happened with the Yes Bank, because it is fully managed by the professionals. So if you see the management, so managements are very qualified person and professionals. So it is very core bank. So if you see FIs, so they are FIs are increasing their stake from 32% to 52%. They have increased, streamed in March 24, but yeah, but significantly they have increased to 48%. So DIs have also increased their stake in the HDFC Bank from 27% to around it is 35%. They are continuously increasing. If you see any mutual fund, take any mutual fund and see their core holdings, then you will see most of 99% of the mutual funds have like 5 to 10% holding of the HDFC Bank. Why they keep? Because this is the principle that their money, they have to also uh, preserve the money of the investors. So this makes the core of the, basically HDFC, they make the core of the portfolio. And government stake is also like increasing slightly, it is 0.18%. And public also, like, yeah, they in December 2023 they have increased, from there they are decreasing. So public are selling, so DIIs are buying and FIs are buying. So we should learn from DIs and FIs. So here you can see, download the PPT and all those things. You can go through its notes also, like it will give you the summary of all the concof call detailed, what all the macro challenges are there, like macro favorable macro backdrop. So in India the macros are favorable, but the global uncertainty, like tariff tension and all those things, due to that is the main challenge. Global uncertainty, liquid and policy. So RBI rate cut, when they are doing the rate cut, so banks are um in loss when the rate is cut, because earlier they were giving the loans on high rates and now they have to reduce the loan rate, but they are getting the uh, money from the RBI from the same rate, so their margin decreases. So but that for the rate cut, it's like normalize in 1 or 2 quarters. So I think right now the main uh, problem in the market is the global uncertainty which come from the tariff war which Trump is doing. So he is like, we cannot predict, anything can happen. Trump is very unpredictable. So franchisee update for post merger, so CD ratio normalization. So these are the like notes: margin stable NIMs, drivers, what are yield on assets, outlook, like management outlook you can get management refrain from providing explicit names guidance, but emphasize that quarter to quarter names are volatile due to policy transition lags. Stability could be assessed over a 12-month horizon. So like we are right now we are in a like policy cut, so the management is also not confident about what the NIM, net interest, NIM is net interest margin. So due to policy RBI policy, that's not certain, because due to global disruptions also. So that's why management is not able to give the outlook. So you can go through all these CASA ratio. CASA is the saving ratio, and uh, saving like banks get money through saving account and current account. CA is current account and SA is saving account. That is the CASA ratio relationship between policy rate. As rate fall, CASA should get gradually improve, but not immediately. So like when the interest rate will decrease, like these uh, FD rates also, these companies, banks will decrease, so that will take time to normalize the rates, so their margin will also improve. So yeah, these are the things you can. So key risk and watch items. So the global macro tariff, trade volatility, global inflation, this is the one more most crucial things which every sector, like IT sector, is also in downturn now due to this tariff volatility only, and others sectors. So this is the main point right now. Domestic liquidity, ongoing transition of rate cut impact on deposit mobilization and kasha recovery. If like due to rate cut, FD rates will go down, so people will take their money from the FDs and they will do invest in other instruments like mutual funds or stock, because they are now getting less revenue from the FDs. Yeah, and competitive dynamics, aggressive pricing by PSU bank in corporate SME lending and high cost bulk deposit. So there are so many banks in PSUs and private also, so they always face the competition. Yeah, so let me know how you like this in comments, and if you wants me to tomorrow talk on other topics, please do let me know. Yeah, people are not commenting. You are coming to my channel, please comment on my channel. And yeah, if you want anything, I can help you in. I can also talk on the personal finance, mutual fund, and your portfolio reviews and all those things. Please do comment below. So now I will wait for another 2-3 minutes. If some questions are coming, I'm happy to answer that. Otherwise, we can wrap up for the day. Yep, friends, please share your question if you want anything more analysis. I am happy to help you on that. Okay, friend, I am not getting any questions, so okay, then like we are done for the day. Thanks for coming to my channel. Please do subscribe for more information and how to do fundamental analysis and of the stocks. Um, yeah, thank you, friends. Thank you for watching.